There is probably a 4 to 5% downside on FY24, Nifty EPS. A large part of it would be, driven in our view by the consumption space, and probably, the stabler ones would be financials, and depending on how the commodities move in the commodity segment. Our target price is not very different from where the market is. So basically, what we are saying is that the earnings growth that we are going to get is going to be largely offset by the valuation compression that we are worried about. Actually, in absolute terms, Nifty, I don't think it's very expensive, but most other asset classes and EMs, equities have actually gone down a lot more. So on a relative basis, India is looking quite expensive. There is some downside on the FY24 EPS, but you're still, at the end of the day, you're still talking about 10 to 12% growth. For the market, our target is this 15,500, which is pretty much where the market is today. That's a 12 months target. Basically, what we're saying is that the growth in the EPS will largely get offset by the valuation decline that I spoke about, because household money support will start waning. I still think banks is a place where I would be still be positive. I think there are a lot of boxes that are getting ticked by by that sector. I mean, valuations are comfortable. They've actually suffered by heavy FII selling because of ownership bias, but valuations are quite compelling. I mean, you're getting into the right part of the cycle when it comes to margins, when it comes to rate sensitivity. Asset quality, worries are far lower than what we would have had in the past, etc. Auto are definitely due for a cyclical recovery. Valuations are pretty attractive, but I think there are some places where there is really good value that are deemed like, and some places where you might want to wait a bit. But yeah, so basically, I would probably say autos is kind of in the overweight between neutral and over. That's also the place which is actually seeing the biggest level of earnings cuts in the market. I think there are genuine worries coming up on top line, on margins, inflation, wage inflation, etc. I agree. Rupee decline, rupee depreciation is a support.